If you are collecting Social Security and still working a job, or thinking about going back to work, what I am about to share could change thousands of dollars in your wallet over the next few years. A new piece of legislation was just introduced in the United States Senate on March 24th, 2026, called the Senior Citizens Freedom to Work Act of 2026. And if it becomes law, the rule that docks your Social Security check when you earn too much money could disappear entirely. That means you could keep every dollar of your benefit, every month, no matter how much your paycheck turns out to be. Before I tell you exactly what is in the bill, who sponsored it, how far along it is, and what you should do right now to protect yourself, make sure you hit the subscribe button and tap that notification bell, because as of right now, depending on when you watch this video, this bill might be one vote away from changing your life. Now let me set the stage. Imagine you are 64 years old. You worked your whole life in construction. You paid into Social Security for 45 years. And you finally started claiming your retirement benefit last year. Your benefit is around $2,000 a month. Then your old contractor calls and offers you a part-time job at $32,000 a year. You would love to take it. But you remember hearing somewhere that if you earn more than a certain amount, Social Security will cut your check. So you turn the job down. You leave $15,000 a year on the table just to protect a benefit that, under current law, gets recalculated upward the moment you hit full retirement age anyway. That is the trap the retirement earnings test creates, and that is exactly the trap this new bill is trying to eliminate. Let me back up and explain something important. Full retirement age, often shortened to FRA, is the age at which you are entitled to your full Social Security benefit with no reductions and no earnings limit. For people born in 1960 or later, full retirement age is 67. For many of you watching right now, it is 66 or 67. Until you reach that magic age, the Social Security Administration, known as the SSA, applies something called the Retirement Earnings Test, and I will call it the Earnings Test for short, to anyone who collects benefits before FRA and keeps working. If your income from work goes over a set ceiling, the SSA withholds part of your monthly check. Here are the exact dollar figures for 2026, and these come directly from the official SSA website at ssa.gov. If you are under full retirement age for the entire year, the annual earnings limit is $23,400. That works out to about $1,950 a month. For every $2 you earn above that limit, the SSA withholds $1 from your benefits. So if you are supposed to get $2,000 a month and you earn $26,000 a year instead of $23,400, you are $3,000 over the cap. Half of that, $1,500, gets withheld from your checks over the course of the year. Now, if you reach full retirement age during 2026 but have not hit it yet, the limit jumps to $65,160 for the months before your birthday, and the penalty softens to $1 withheld for every $3 over the cap. Then, the month you actually turn 67, the rule vanishes entirely. There is no limit at all. You can earn $1 million and your full benefit keeps flowing. Now let me share something most people never hear about. The money the SSA withholds under the earnings test is not lost forever. Once you reach full retirement age, the agency does a recalculation and gives you credit for those months. So in many cases, your monthly benefit goes up a little later in life to make up for what was withheld. But that does not help you today when you need the cash. Many seniors, especially those on fixed incomes, depend on that monthly check the moment it lands, and losing even part of it creates real financial stress. That is why this new bill matters so much. The bill itself is Senate Bill 4184, introduced on March 24th, 2026 by Senator Rick Scott of Florida, along with Senator Tommy Tuberville as a co-sponsor. The legislation is officially titled the Senior Citizens Freedom to Work Act of 2026. It is short, but it is powerful. The bill amends Title II of the Social Security Act and repeals multiple subsections of Section 203, which is the part of the law that contains the retirement earnings test. In plain English, the bill removes the rule that reduces your Social Security benefits when you earn over the limit. It also strikes equivalent language in the Railroad Retirement Act, so railroad retirees get the same treatment. Now, and I want to be very clear and very honest with you here. This bill is currently introduced, which means it has been read twice on the Senate floor and sent to the Senate Finance Committee for review. It has not passed the Senate, it has not passed the House, and it has not been signed by the President. So, as of the day I am recording this, the earnings test still exists and still applies to you. I will not lie to you and tell you otherwise. But the fact that senators are pushing this bill means momentum is building, and if you act now and understand the rules, you can be ready the day this becomes law. So why do so many politicians support getting rid of the earnings test? The arguments are pretty simple. First, American workers are living longer, and many cannot afford to retire at 62 or 63. They want or need to keep working. Second, the penalty discourages older Americans from contributing their skills back to the workforce at a time when many industries are short on experienced workers. Third, the rule is confusing and causes real financial harm to people who do not realize they are crossing the threshold. And fourth, because the withheld money is later credited back anyway, many economists argue the test does little to save the system money, but creates a lot of paperwork, stress, and lost economic activity. Let me give you 3 real-life examples so you can see how the earnings test plays out right now. Example 1. Janet is 62, her full retirement age is 67. She started her benefits early and gets $1,400 a month. She takes a seasonal retail job that pays her $28,000 a year. $28,000 minus $23,400 is $4,600 over the limit. Half of that, $2,300, gets withheld from her benefits across the year. Janet loses almost 2 months of checks for working. Example 2. Robert is 64 in 2026 and turns 65 in October. He gets $2,100 a month. From January through September, he earns $55,000 from his consulting work. That is well within the $65,160 cap that applies in the year you reach FRA, so his benefits are untouched. Then in October, he turns 65, although his full retirement age is 67, and now the penalty structure becomes slightly different. But the concept is clear. The closer you are to FRA, the higher the cap and the lower the penalty. Example 3. Maria turned 67 in February, which is her full retirement age. She works full-time as a bookkeeper, earning $75,000 a year. Social Security cannot withhold a single penny from her $2,000 monthly check. The earnings test no longer applies to her at all. Now let me talk about what you should actually do right now, regardless of whether this bill passes. If you are currently working and collecting Social Security before full retirement age, keep careful records of every paycheck, bonus, and self-employment income. The SSA does not receive your tax returns automatically for the earnings test. They receive your wage reports from the Social Security Administration itself, which mostly come from W-2 forms your employer files. But if you are self-employed or have income that does not show up on a W-2, you must report it. Failure to report earnings the SSA already knows about is not a problem because they have the data, but failure to report earnings they do not have access to can lead to overpayments and demands to pay money back later. So transparency saves you. If you are thinking about delaying Social Security until after full retirement age, that is a separate decision and I will only touch on it here. For every year you delay past FRA up until age 70, your benefit grows by roughly 8% through what are called delayed retirement credits. So delaying is often a smart move for people who can afford it. The earnings test does not change that math, but it does change the cash flow during the years before FRA if you choose to work. That is why the new bill is so important to anyone planning a phased retirement. Let me pause here and remind you of something important. I am not a financial advisor, I am not a lawyer, and I am not the Social Security Administration. Everything I share is for educational purposes only. Your tax situation, your benefit amount, your state of residence, and your specific work situation can change everything. So please, before you make any decision based on this video, call the real SSA at 1-800-772-1213. That number works for the entire United States and the call is free. You can also visit ssa.gov/retirement to read the official explanation of how work affects your benefits. Go straight to the source, especially when thousands of dollars are on the line. Now let me walk you through the action steps, in order just like a checklist. Step 1. Find out your full retirement age. If you were born between 1943 and 1954, it is 66. If you were born between 1955 and 1959, it is 66 plus 2 months for each year. If you were born in 1960 or later, it is 67. You can confirm your personal FRA by going to mysocialsecurity.gov and looking at your earnings statement, or by calling the SSA phone number I just gave you. Step 2. Add up your expected 2026 earnings from wages, salary, commissions, bonuses, and net self-employment income. Do not include pensions, annuities, investment income, interest, dividends, or veterans benefits, because those do not count against the earnings test. Step 3. Compare your expected earnings to the limit that applies to you at your age. If you will be under FRA all year, use $23,400. If you will reach FRA during 2026, use $65,160 for the months before your FRA birthday. Step 4. If your earnings will go over the cap, plan ahead for benefit reductions. The SSA will not tell you ahead of time how much they will withhold. They figure it out at the end of the year when your wages are reported. To avoid surprises, you can ask the SSA to withhold benefits in advance using Form SSA 44, also known as the Request to Lower Withholding Amount. This helps you avoid a giant overpayment notice 2 years later. Step 5. If this new bill passes and the earnings test is repealed, your benefits will no longer be reduced based on your work income, and the money you are currently losing will simply stay in your pocket. Keep checking the status of the bill at congress.gov by searching for S4184 and call your 2 senators to let them know whether you support it. Senators listen to senior voters back home far more than they admit publicly. Let me address a couple of questions I get all the time. Question 1. Do I have to pay this money back if my benefits get reduced today? No. Once you reach full retirement age, the SSA recalculates your benefit to credit you for the months money was withheld. It is not a debt. Question 2. Does the earnings test apply to spousal benefits or survivor benefits? It can apply, but the rules are slightly different. Survivor benefits use your own FRA, not an earlier one, for the earnings test. If you are collecting only as a survivor and are past your own FRA, the test does not apply to you at all. Question 3. If this new bill passes, will it apply to me immediately? Based on the effective date language in the bill, the repeal applies to taxable years beginning after the date of enactment. So once signed into law, the change would apply to the next tax year and forward, not retroactively. That is another reason to keep paying attention to every update. Now I want to talk about who really stands to gain the most from this bill. If you are 62 to 66, still working either by choice or by necessity, and earning more than about $24,000 a year, this bill could put thousands of dollars back into your pocket. If you are self-employed, a consultant, a contractor, a freelancer, a tradesperson, or a small business owner, the current rules punish you twice. Once through withheld benefits and once through self-employment tax, so any relief is welcome. If you are a caregiver returning to the workforce after years out of the paid labor market, this bill removes one of the biggest psychological barriers to going back to work. And if you are a younger senior with a working spouse, your household income could grow significantly because nobody in the family has to hide earnings anymore. Let me also tell you what this bill does not change. It does not change your full retirement age. It does not change the amount of your benefit at FRA. It does not eliminate the early retirement reduction if you claim at 62 instead of 67. It does not change the delayed retirement credits that grow your benefit up to age 70. It does not eliminate Social Security taxes on your wages up to the taxable maximum. And it does not change Medicare premium rules, although I will warn you that higher earnings can lead to Medicare Part B premium surcharges known as IRMAA, the income-related monthly adjustment amount, 2 years after the income year. So even if the earnings test disappears, IRMAA can still raise your Medicare premiums based on your income. That is a separate conversation for another video, but please keep it in mind. Now let me talk about how much money is really at stake if the bill passes. Suppose you are 63 and earn $40,000 a year. Under current law, you exceed the $23,400 cap by $16,600. Half of that, $8,300, gets withheld from your Social Security benefits over the year. That is roughly $690 a month you do not receive. Over the 3 or 4 years until you reach FRA, that adds up to $25,000 to $33,000 in benefit payments you do not collect in real time. Under the bill, those dollars stay in your pocket. That is the difference between struggling and breathing a little easier in early retirement. Let me look at the bigger picture for a moment. The retirement earnings test has been around since the original Social Security Act of 1935. It was created at a time when most people retired at 65 and died a few years later. Today, Americans routinely live into their 80s and 90s, and many want or need to work into their late 60s. The Social Security trustees themselves project that the trust funds will face funding challenges in about a decade, and one way to shore up the system is to keep older Americans in the workforce longer. This bill is part of that conversation, even if it does not touch the solvency question directly. Bipartisan support for repealing the earnings test has grown over the last several years because both parties recognize that work disincentives hurt seniors and the economy. Now I want to share some practical resources you can use today. Resource 1, the official SSA phone number, 1-800-772-1213. Resource 2, the official earnings test calculator on ssa.gov, found at ssa.gov/oact/cola/rteffect.html. Resource 3, publication number 5-10069 from the SSA titled How Work Affects Your Benefits. Resource 4, the My Social Security online account at ssa.gov/myaccount, where you can review your earnings record and your estimated benefits. Resource 5, the full text and status of Senate Bill 4184 at congress.gov/bill/119 Congress/Senate Bill/4184. Bookmark that page and check it monthly. Let me close with what I really want you to remember. First, the retirement earnings test exists right now, and it can take back part of your Social Security check if you earn over the limit before full retirement age. Second, the money is not truly lost, but it is delayed, and delays hurt people who need cash today. Third, a new bill, the Senior Citizens Freedom to Work Act of 2026, Senate Bill 4184, was introduced on March 24, 2026 by Senator Rick Scott, and it would repeal the earnings test entirely. Fourth, as of today, the bill has only been introduced and referred to committee, so the test still applies. Fifth, you should understand exactly how the current rule affects you, calculate your own exposure, and make plans based on what the law actually says today, not on what we hope it will say tomorrow. Sixth, take action right now. Call the SSA at 1-800-772-1213 to confirm your full retirement age and your benefit amount. Use the official earnings test calculator to model your situation. Track your monthly earnings carefully. If your income goes over the cap, file Form SSA-44 to adjust withholding. And finally, contact your 2 United States senators and your representative in the House to tell them how the earnings test affects your life. Politicians pay attention when seniors speak up, because seniors vote in higher numbers than any other age group. If you want this bill to become law, your voice matters more than mine does. If this video helped you understand what the earnings test actually does, please share it with a friend or family member who is still working and collecting Social Security. Thousands of seniors lose money every year simply because nobody ever explained this rule clearly. A single share could keep a friend from losing $2,000, $5,000, or even $10,000 in benefits they did not know they were giving up. Smash the like button if you want more videos like this. Drop a comment telling me whether you think the earnings test should be repealed, and subscribe so you do not miss the next update when this bill moves forward or when other major changes hit Social Security. I will see you in the next one.